This is the Beyond Return Show, a forum about business, markets, financial planning, and more. We are here with Montebello Avenue's founder, Robinson Crawford. Robinson is a certified financial planner who serves clients locally and throughout the country. Robinson is also really good at taxes. My name is Gabe Kaplan. I'm the founder of Wealth Habits, a wealth management firm. I'm a financial advisor, and I also help people manage portfolios for them. I do also help people with taxes. I'm helping a lot of folks from a certain company that's going to do an IPO soon via direct listing. How about we talk today about the new legislation that just came out?
American Rescue Plan, American Rescue Act.
Yeah, it's the Stimulus Act, right? The one that gives you $1,400 if you earn below a certain threshold. And then we also have for today some topics around children. So if you have or having a kid, what to expect. They read the whole thing in Congress.
Oh, really?
You remember that? Yeah,
No,
I think it was like 668 pages of like changes. And somebody like said, no, you have to read the entire thing. And so...
you mean out loud, or they all just sat there?
Yeah, out loud. They had to be read.
Wow.
I see it containing three very big, I guess, provisions, help. One of them is the stimulus payments, the $1,400 that everybody's talking about. The other one is the extension of the unemployment benefits. I think it's $300. I don't know how many months or weeks it is. I forgot. In the expanded child tax credit for this year. Now, we have to be very clear here. Unemployment benefits, you have to be unemployed to get those benefits. So, it's better not to get those benefits, I guess. Better to remain employed. Stimulus payments, there's phase-outs for that, right? And the expanded child tax credit, I think there's phase-outs for that too, right?
Definitely.
So everything, if you're a high-income earner, this doesn't really matter.
Like, you're not going to see necessarily a direct benefit from it, but ultimately legislation does very much matter. Markets care a lot, for example, about what's going on. So it affects you possibly slightly more indirectly, but this is legislation. And I don't know if this has been the case in your career, but for my career in the past, since COVID, we've had the most legislative changes that directly affect the work that I'm doing, the plans that I'm making with clients, and, the numbers in their bank account. Post-COVID is the first time where it's like, oh, it's extremely direct, right? And more so than, changes to retirement plans, stretch provisions, or whatever that's more narrow or more indirect.
Yeah, it's been incredible. We had the Trump tax cuts, right?
Mm-hmm. TCJA.
That affected, my work tremendously. It affected estate attorneys a lot because it practically reduced to tatters their work. It took away their jobs, basically. Because they
explain that.
Yeah, they raised the exemption. So like you would have to only file estate taxes on a state tax return if your limit went beyond, I think it was like 11 million per person, right? So 22 million per couple. If you passed away, you could have those assets that would pass to your heirs federally tax-free. If you live in a state like New York, well, unfortunately, there's other limits there. But if you live in Florida, I think there's no limits, right? So Florida doesn't have an estate or an inheritance tax, and so as a result, between you and your wife had 20 million in assets, they would pass on to your heirs tax free.
The Tax Cuts and Jobs Act expanded that upwards, right? From what, like 6 million person to 11 million person?
5.2.
Yeah, it expanded it upwards, so the net of who that affects, of who that amount touches, it got smaller.
That reminds me. This whole conversation reminds me of I forget who was the owner of the New York Yankees. Do you remember?
Steinbrenner.
So Steinbrenner passed away in a very specific year where the Bush tax cuts had eliminated the estate tax completely, no limits. I think he passed away that year, and he was able to pass on the entire organization to his heirs tax free. Although I think they had to choose step up of basis, meaning like, oh, the value of the organization becomes whole again. There's no way of really explaining that. And then, but they pay taxes on that, increase in tax value, or they would pass on to the heirs at whatever value.
Tax-free, but at the old basis.
At the old basis. So if they sell it, they have to use that old basis. They can't use a step-up basis, which normally does. But
it feels like the stimulus payment sections, like the drop-offs are clearer. So we have very clear lines at $75,000 for individuals and $150,000 for married couples on who's getting these checks deposited. That part, I like the simplicity of that. It seems straightforward, and it's based, is my understanding, correct me if I'm wrong, on the last tax return that's actually been filed, right? So for some people who have already filed 2020, it'll be based on that. And for some people who their last one is 2019, it'll be based on that. So it's a last kind of stamp that you have on file with the IRS as to what is your AGI, right? It's adjusted gross income of $75,000 or $150,000, I believe.
What happens if for 2021 their AGI jumps from 100 to a couple, right? 100 to 200?
You mean from so like they get the check, for example, they
file taxes, right?
Right. They were at 100 for 2019, and then when they file 2020, they realize they're at 180, 200, right above it.
Yeah.
I believe that the functional outcome is that you will pay this back. Is that your understanding?
I thought so too. It was like something like, remember like the Medicare like premiums, I would say the discount you got for being below a certain, income threshold, but then you ended up at the higher threshold. You would have to pay back a portion of that subsidy you would usually get.
Yes, there's a series of checkpoints to go through, and this actually gets fairly complicated, and I'm not prepared to give the listeners actual advice about this. We'll link in the show notes the blog post by Jeffrey Levine that I think is very comprehensive and good on possibly navigating those checkpoints. So if you feel like this applies to you, number one, talk to your tax preparer, your financial planner, and I would actually read this blog post specifically before doing that to try to arm yourself. But it gets a little wonky if you seem like you're eligible for this $1,400 or more stimulus payments, and then it turns out that you're not. There's some navigating to do there that's worth doing now rather than later.
And then on the second aspect, after the stimulus payments, which is like $1,400, but you could technically get more, right, if you have kids?
Kids or dependents, parents, people who are taking care of older parents, for example, and claim them as dependents. That could be a sibling or other family member as well too. But yeah, you get extra.
So what is the maximum amount you could get?
The eligibility in this cycle has been expanded from including just children under the age of 17 to all dependents in the household.
So I think the enhanced benefits is $300 per week of pandemic unemployment assistance, and it is extended until September 6th, 2021. So that's a good amount of almost 6 months from the date of this recording, almost that amount.
It was a really dramatic thing last year when the state benefits were stacked with the $600 a week extra from the federal. $300 is still significant. I'm sure this was an area of huge debate. I personally didn't spend my time watching them debate the ins and outs of this, but I'm glad that it expanded. Unemployment benefits are so they've given the power to the states to both administer and set the levels of this. So in my mind, it's good to see the federal government add some padding to that.
Are those benefits excluded from 2020 tax returns?
I don't know that.
So
you think the federal portion is excluded from income?
I actually think that you grab both of them together, and I think up to $10,200 of unemployment compensation is excluded from taxable income, and that's something very important to remember. Most tax softwares will actually automatically put that in, but if you should always ask your tax accountant if you have one. or just check if you're using TurboTax or any of the other tax software preps that that is the case. If you received unemployment compensation, you should just make sure that $10,200 of that, if you receive more, is excluded from your federal taxable income.
Let's touch briefly on the child tax credit.
The child tax credit is expanded. It is expanded so it's $3,000 per qualifying child. In the case of a qualifying child that's age 5 or younger, as of December 31st, 2021, then it's $3,600. And the age limitation for a qualifying child was increased from age 16 to age 17.
So this is a big deal. When we say it, when we describe it like this, we're like, all right, up to from 2,000 to 3,000, and then 3,600 for kids under 6, and then you expand it to age 17. That doesn't sound that big, but it's counterintuitive here that we're talking about credits and not deductions.
So a credit is worth way more than a deduction.
Credit is dollar for dollar.
Dollar for dollar. A deduction, well, you have to use your tax rate. And if you haven't made a lot of money, your tax rate is pretty low, then like $1,000 deduction is actually only equivalent to maybe for if your effective tax rate is 20%, it's effectively equivalent to $200 of tax credits. So you have to tax adjust the deductions to make it, to get to the credit number. The $2,000 per qualifying child still applies until your modified AGI reaches to the previous threshold. If you're making less than $150,000 as a married filing jointly couple, then there's a lot of money to be dispensed. If you're a couple with 2 kids, both under the age of 5, what would be your stimulus plan? The stimulus here, the check.
My gosh, yeah, so $1,400 for each of you. $1,400 for each kid, so that's $2,800 times 2 is $5,600, right? $5,600 in actual deposits going into your account, and then you can expect for 2021 your child tax credit to be, if you have 2 kids under the age of 6, $7,200 off of next year's taxes.
Yeah,
that's pretty serious.
And let's say you're making $120,000 together with your wife. Right? So if you divide that by 120,000, that's an extra 10.6%. But you have to think about that, like, the 120,000, you have to tax adjust it, right? So like your leftover after taxes maybe 90, after state and federal taxes were 95. It technically it's a much nicer boost. It's probably like closer to might even reach 13, 14, even 15% of your disposable income.
April 2022, hopefully some people will be very happily surprised. Maybe didn't understand this legislation when it was passed this month, but here's hoping they'll reap the benefits. And I think it's good. Look, I think that was a good place to focus. Child tax credit is the people who very likely have been hit the hardest by this pandemic. I remember reading a really jarring New York Times piece a few months ago about single moms trying to make it work during the pandemic. It was incredible how much they're going through to try to work, keep kids on Zoom classes. That's a really tough scenario. So I'm glad they've been targeted. I don't know that this fixes all the structural problems. I won't really comment on that. I have no idea, no way to measure that, but I'm glad people with kids have been targeted for a generous credit.
Then there is a couple of additional things. There you have the earned income credit, which was increased. You have the dependent care expense credit. So if you're sending someone to daycare, or if you have a nanny, yeah, you should be able to get a credit for that. The amount of help I think this bill contains, or increase in help, is astonishing. I never thought I would see this.
I'm going to actually pull you off of that and pull you to a question I want to ask you about that I get from a lot of clients. For background listeners, I just got married, but I'm not a parent, and Gabe is a dad of one. And I want to talk about just the effect on a household's finances and cash flow of going from a couple that just takes care of themselves to having your first kid, whether it's adopted or having one. What does this do? How do you plan for this, and how do you advise clients to think about this as they're approaching this? Because I know that there's obviously the personal side is a tremendous, like totally life-changing event. It changes a lot on the financial side. How do you think about that, and how do you guide clients on that?
So I want to talk first about pregnancy and like delivery as like one aspect of it, and then post. I would say in post there's like, the first 6 months or whatever you want to call it, and then afterwards. I think the most important thing in the pregnancy was just to understand how insurance would charge us for all the health care that we got. Like my wife ended up having a C-section, it wasn't planned or anything. Would that be covered? I would recommend, and this happens all the time, I would recommend anybody who's going to deliver somewhere to check with insurance beforehand, to get pre-clearance from insurance beforehand so they don't get a surprise bill. That's number one. And the hospital where my wife delivered did this. They actually like pre-cleared it with insurance, and we had to pay. I mean, I think it was like a $500 deductible. It was still money, but it doesn't compare to like what the insurance paid to the hospital, right, for that delivery. And I would not want to be on the hook for that. It was like, I don't know, over $10,000. And then number two, which is, I would say the first 6 months that you're taking off, you need to check with your, employer to make sure how much they're paying, if they're providing any support. I think my wife had to go on disability insurance. And
Short-term disability?
Yeah, short-term disability. I mean, it really sucked, but because our income kind of like dipped below. But we knowing that, we plan for it, right? Which is the key thing. I think in all of this, it's not so much, you want to have a kid, you're going to have it. The question is like, you need to plan for it, right? Planning economically for it. So that's something. And then afterwards, it's just the ongoing costs of maintaining a kid. I think the most expensive part right now, until they go to like pre-K or kindergarten, is daycare or nanny, right? Those are it's the biggest expense by far. We both work, so we need help. And my mom has been gracious enough to lend her help for 2 days a week, but she also has her own life. And food. I think food is very expensive at the beginning. So if you're working with formula can be the main cost of a kid. I think clothing and other stuff. It really depends on the family you have. If you have family that wants to help out, you will see that clothing will not be an issue that you will have to worry about. Also, like the other stuff, like a carriage, or like the initial buy-in stuff, it's a large capital outlay.
All right. So far you touched insurance. I love that one as like a starting point. This is an unfortunate thing about just being an American. If you're going to have a kid, you are beholden to the insurance, the medical insurance that you are on. So whether that's Medicaid for lower income people, whether you're paying out of pocket for a plan from healthcare.gov, or whether you have something through your employer, you need to get intimately familiar with the details there. I very much second that. What do you think about the idea of, just as a starting point, maybe if someone's not ready to call their insurance company and get all this, what do you think about just looking at max out-of-pocket numbers as a decent starting budget, right? Let's assume everything goes wrong and you're out of network.
If you have time, getting pre-clearance is like, I think it's much more effective.
Yep.
And you get way more peace of mind. But it is important to know what is your potentially maximum liability, or like potential maximum that you would have to spend in case things do go wrong. So it's a valid concern. You plan for the worst, and then things end up hopefully not being bad at all, and hopefully it ends up working as one of the best case scenarios, specifically around children. This is like, it's a big mistake what people do to navigate insurance post, like, post having a kid versus before. It's night and day.
One more piece there. Did you find a radically different premium to add a third person to your family insurance?
It was higher. I mean,
A good bit
it
higher.
is higher, but not substantially.
Mm-hmm.
I'm a solo advisor and I don't have insurance, so I'm on my wife's insurance. And even though she works at a hospital, her insurance was not as good as the one I had from the old consulting company that probably knows how to negotiate or has much more power and influence to negotiate. The other thing is, depending on your insurance plan, right? So there is like the high deductible plan and there is the low deductible, like super fancy plan. And people don't realize that, from an economic standpoint of view, you might not be better off being on the fancy plan. You might even pay more there, but it gives you peace of mind and it gives you not the hassle to have to work through the network things and stuff like that. It just provides an easier way to access your providers. And we had to, I think when we started this journey, my wife and I, we were on my insurance from like my old job. And when we switched to her insurance, we had to switch providers because they weren't in
New
network
network
anymore. Yeah. And that sucks. So
your premium went up slightly for your health insurance. On short-term disability, did you have troubles navigating that? Was making a claim on that a fairly straightforward thing? I think many short-term disability policies through employers are very specific around making a claim for pregnancy. Did you find that was the case?
they were a hassle. It was not so much of a hassle. It was just her employer wasn't aware of the process, or the person behind the desk at her employer was not aware of the process. She was new. I don't know what it was, because like she definitely wasn't the first pregnant person at the hospital where she works at. That is kind of frustrating. So, but you have a couple of months to do it. I would say don't procrastinate on that. Keep the process going, even though it takes a little bit of time. There's a ton of documents you're going to end up signing beforehand. I feel like I'm complaining here. I still am going from like a Cadillac plan to I went from like a Porsche plan to a really good car plan.
Okay, a Porsche to Mercedes or something?
Yeah, something like that. Because some people prefer one to another, but my old plan was, definitely superior. It's chaotic to switch providers. That's a problem, right? Specifically in the middle of a pregnancy.
Oh, yes.
And so, at the end of the day, it's just a pain, because you have to go through like a bunch of stuff, new stuff. They will want tests, and then sometimes the records don't move over. Just that part was painful, and it shouldn't have been. And then don't forget, like once the baby is born, you have to add that person to the plan. I don't know how many days you have, but
what would you say to, let's say that someone is family planning and they think that they're going to have their first kid, and thus far they've been good at saving money, right? They've had good incomes and they've done a good job of saving that money to reach their goals. And they're worried that their savings rate is going to go down really dramatically after having a kid. What would you say to them? It's
worth it.
First of all, it's true. It's going to happen. Their savings rate will go down.
Yeah, and that's effectively true. There are ways of keeping it up. It's just, you have other expenses that are, it's natural. Mm-hmm. I think in any situation where you have a kid, the most expensive, my kid is only 2 and like a quarter, so I only know how it's been for now, but it's been pretty expensive to have childcare. That's the truth. But it doesn't last forever.
Yep.
And there are ways of making it cheaper. You just have to find the right daycare or whatever, and that works for you. Some people will choose the closest one. Some people will choose the one that's a little bit less expensive, that is a little bit further. Whatever works for you. If you have family that can help, that's great. But that is the biggest expense. And yeah, so my savings rate has definitely gone down. not because only the child, but because we've needed more space.
And maybe car, if you don't live in New York City, car that's big enough for...
Even if you
everyone to
live
get
in New York City, you probably would want that car.
Okay. There you go.
There's one thing, though, that I tell folks, and they're surprised about this. A 529, you can set it up. 529 is a college savings plan. If you are already thinking about having kids and you know it's in the plan, you might as well just start a 529 beforehand. You can start it this year and put money into it. And even if you have a kid 3 years down the line, and then change the beneficiary. What do people do for 529 in Arizona? Do they open an Arizona one or a Utah one?
Utah, for the most part.
Really?
I've been exploring a little bit about prepaid plans, which have gotten a little bit more interesting than they used to be, I think. The marketplace for them has expanded, and the amount of educational institutions participating in that, because it's a good deal for a lot of institutions.
But you have to bet that the kid will get in, right?
Correct.
And if he doesn't get in, what happens?
I think it gets treated like a low return 529 plan.
What rate are you getting? Are you getting like today's college expense?
You're getting a discount to today's college expense.
Discounted today. So if you think inflation will go up 4.5% a year,
then
and you
can be a terrific deal.
I wish there was a prepaid plan for 5 universities where you pay in and you can go to any of these 5.
There are.
Oh, they are?
There are, yeah. That's what I'm saying. So the institutions participating in these prepaid plans have expanded significantly.
No, meaning that like, hey, I'm paying $10,000 a year for the next 18 years, but my kid could use that credit to go to A, B, or C or D.
Yes,
that exists. That's like that's a much better deal. I feel like
on the having a kid thing. I feel like we covered a lot of the good ones. The insurance is a big one. Planning for being out of work. Other than that, Gabe says it's worth it. So go for it.
Definitely worth it. High return on happiness. I have not yet traveled much with a kid because of the pandemic. But we did, before the pandemic, we went to California. Traveling with a kid is not as expensive as you think it would be until I think they need their own seat at age 2, I believe it is.
Okay.
But it's going to be so funny to put like this kid who can barely fit in that one of those seats. Is there anything else on your end that you wanted to know about child?
All good. I think that was a great start. We'll dive more. We'll get on the prepaid 529 plan and make sure that we cover that. That's an interesting thing to double click on, but I think we're good for this episode.
It was good to speak to you, and see you next week.
Adios.